A new correction phase has hit digital markets on this November 11, 2025, with Bitcoin returning to test the $100,000 level despite the approval of innovative financial instruments. The first spot XRP ETF debuted on NASDAQ, marking a milestone for institutional cryptocurrency adoption, while OKX revolutionizes user experience with DeFi features integrated directly into its centralized platform. I'm Talia Kaplan. Major digital currencies show negative performance in today's session, moving in sync with the weakening of major stock indices, particularly in the technology sector. Investors appear increasingly skeptical about potential monetary policy easing, despite the federal government reopening after the prolonged shutdown that kept markets under pressure in recent weeks. During midday trading, Eastern Time, Bitcoin touched the psychological level of $100,000, while Ether registered a decline of about 2%, reflecting the atmosphere of uncertainty permeating the entire sector. XRP was the exception, gaining over 2.5% following the start of trading of the first dedicated U.S. spot ETF, Canary Capital's XRPC, on the NASDAQ market. This development represents a significant step forward in the institutional adoption path of digital asset classes. Let's now analyze the most relevant news of the day. Grayscale Investments has officially begun the process for its U.S. public listing. Through a press release distributed during early market hours, the digital asset-focused investment firm announced it had filed an S-1 form with the SEC, aiming to list its Class A common stock on the New York Stock Exchange under the symbol GRAY. The company specified that the price and size of the offering would be determined later, emphasizing that the listing remains subject to market conditions. Grayscale boasts a long history of innovation in crypto investment products, starting with its famous Bitcoin Trust. Its legal battle to transform that trust into an ETF set a crucial precedent, paving the way for numerous spot Bitcoin fund launches throughout 2024. Recently, BlackRock's IBIT surpassed Grayscale's GBTC in assets under management, while simultaneously the company diversified its offerings with products like the Solana ETF with staking rewards, which became operational last October. On the regulatory front, SEC Chairman Paul Atkins outlined a new agency strategy for classifying digital tokens, while expressing support for congressional legislative efforts regarding market structure. During a speech at the Federal Reserve Bank of Philadelphia, Atkins presented what he called a coherent taxonomy for tokens, articulated into 4 distinct categories with their respective legal qualifications. The first category, digital commodities or network tokens like Bitcoin, does not fall under the definition of securities. According to the chairman, the same applies to digital collectibles and utility instruments like tickets or digital credentials. The fourth category, however, comprising tokenized securities representing financial instruments, fully falls under SEC jurisdiction. In his address, Atkins assured that the agency will continue to collaborate with the CFTC, banking authorities, and Congress to build a solid and comprehensive regulatory framework, reiterating support for legislative initiatives that could lead to clear sector regulation. The absolute protagonist of today's technological innovation is OKX, which launched a revolutionary decentralized trading feature natively integrated into its mobile application. This technological advancement allows users to directly access decentralized markets built on Solana and Base starting from the centralized exchange interface, creating a seamless bridge between two previously separate worlds. I spoke with Roshan Robert, CEO of OKX for the United States, about the implications of this launch. He illustrated the functionality of the new feature and its potential impact on the user experience. OKX is taking a decisive step towards integrating centralized and decentralized finance, stated Robert. Today, our users can operate simultaneously on centralized and decentralized markets through a single application, starting right here in the United States. We are democratizing access to DeFi liquidity for our vast base of institutional and retail clients. When asked to elaborate on the functionality of the new feature, Robert explained, "The product is called CDI and essentially represents a window into the world of decentralized finance for all our centralized exchange clients. It's our way of uniting CFI and DeFi in a single app, while maintaining the highest standards of security and control." Clients accessing the KYC not only benefit from all centralized exchange services, but through an integrated self-custodial wallet can access the entire DeFi ecosystem, particularly on Solana and Base. Considering that decentralized exchanges process monthly volumes of billions of dollars, and that increasingly more tokens debut on DEXs before landing on centralized platforms, I asked Robert how much these factors influenced the decision to develop this feature. The adoption of the DeFi ecosystem globally has provided us with significant data, he replied. Beyond market statistics indicating a compound annual growth rate of 40 to 50%. Internally, we have recorded impressive numbers. Approximately $80 billion in volume through our DeFi ecosystem, and nearly 4 million active wallets daily. This convinced us that the future of finance is being built in this direction, and our task as technologists is to remove the complexities that prevent users from accessing it. We have therefore abstracted elements like gas fee payment and seed phrase management, introducing passkeys for a more intuitive experience. On the regulatory front, particularly crucial for DeFi, which still lacks a unified federal framework, Robert commented on recent legislative developments. The draft crypto market structure law presents several positive elements, such as the prominent role assigned to the CFTC and the focus on client fund segregation. However, we note the lack of specific regulation for DeFi, an aspect we hope will be developed through the consultation process. We intend to actively contribute to this debate with our technological expertise. Regarding OKX's expansion in the United States, launched in April with the consolidation of the San Jose headquarters, Robert appeared extremely positive. Results exceed our expectations. We are recording exceptional growth in onboarding both retail and institutional clients. We have expanded our offering with a unified stablecoin order book, integrated payment options like Apple Pay and Google Pay, launched the USDG rewards program with a 4.1% yield, and introduced advanced tools like trading bots. We are carving out a distinctive position as a reliable and compliant exchange. Concluding with market prospects, Robert shared his vision. Recent volatility is physiological in a high beta asset class like crypto, which amplifies macroeconomic dynamics. However, the fundamentals of Bitcoin, Ethereum, and the entire ecosystem are now solid and recognized at the institutional level. I am convinced that Bitcoin will continue its strengthening path, despite cyclical fluctuations. November 11, 2025, thus confirms itself as a significant moment of transition, where technological innovation and regulatory evolution proceed hand in hand, designing an increasingly hybrid and interconnected financial landscape. All right, that's all for today. Our next update is scheduled for tomorrow. See you then.